The yogas of course did make a reference to that, whether the mere presence of a fund manager would not create a residential status, will not make that fund resident in India, for which there is a provision made in 1982. Perhaps it seems to have been made for the non-corporate entity, because in case of a non-corporate entity, there even one person control and management under Section 6 might create a residential status. But of course, that 9A is not likely to work, in any case. So, on account of the conditions which have been described, a number of things can be said on 9A, but since it is not likely to come into practical effect, it's not worth discussing at this stage. In the context of alternative investment fund, there are corresponding TTS provisions made in 194 LDB at the rate of 10%. The yogas did make a reference that they have not provided a distinction between resident and non-resident in that provision. It seems that they have not provided because that there is no concessional rate of tax for them, while in all other provisions where they have provided there is a concessional rate of tax. Perhaps they may be, they will be taxable at the maximum rate, and therefore they may need to provide at least 10% itself, according to me, may not be enough. In fact, for non-resident, they should have provided rates in force. That would have been much better. So far as the general anti-avoidance rules are concerned, everybody is happy. Again, when we reach somewhere at the end of 2016, everybody will start fearing, GAR is coming, GAR is coming, GAR is coming. Perhaps, I hope that government will not realize at that stage that we need to do something with the GAR. This is when it applies. But the clarification, that the GAR will not apply to investments made prior to 1st of April 2017, that is the grandfathering provisions. That is to be amended by way of rules. Now the rules also, I am sure, will be amended somewhere in 2016 or 17 after the law takes place. And I hope that at that stage one doesn't forget that this is what we had stated. And I am saying this for a purpose. Because at two places I was just reading carefully the interview of the Revenue Secretary on this GAR. And in both the places I found that the words which he used were that the transactions up to 31st March 2017 will not be covered. Meaning he said that it will apply in respect of transactions taking place on or after 1/4/2017. Now what do we mean by transaction? The transaction of investments made today, when I sell the shares, is likely to be made after 1/4/2017. So, is it really a grandfathering? So that is the understanding perhaps of the Revenue Secretary, and then I again checked out what the Minister has said really, because this is what the Revenue Secretary said. Fortunately, the Minister has very clearly stated that investments made on or after 1/4/2017 only will be covered. So I hope that when the law is made, it is the Minister's statement which will prevail and not the understanding of the Revenue Secretary. Otherwise, there would not be any grandfathering at all. There could be two views, of course. Personally speaking, on a philosophical level, whether there should be grandfathering or not. But we are not on that. We are on what is being stated on the floor of the Parliament. So this is what is something I thought I just mentioned from various provisions, which many of the discussed and explained to us. Gautam, in a hurricane manner, from beginning to end, has covered large number of provisions. The issue in the context of DDT would remain. I don't know whether the 184 will solve it, 294 will solve the problem or not. But in the context of charity, I said in the beginning itself that the government has always been uncharitable. Whether the amendment which is sought to be made is widening the relaxation or it is narrowing down the relaxation, that perhaps is the issue. Because in the context of charity, now at least the trend which has started, and I believe that it should continue, It is the Delhi High Court and the Calcutta Tribunal are treated as the fair and justifiable decision. And in that event, any activity which is carried on in pursuance and furtherance of my main object of charity, though maybe indirectly falling in the proviso, should not be considered as non-charitable purpose. That is what is the sum and substance of this. Okay, we have an Andhra Pradesh High Court judgment against us, with which Delhi High Court is not agreeing, and therefore to that extent there is a difficulty. So what would be our approach, perhaps? Perhaps our approach first should be to have a contention that this is not falling in the main proviso. So if it doesn't fall in the main proviso itself, on the ground that this is an activity which is not covered because it is in the course of carrying on my main object of the trust. If we succeed on that, then I think we don't have to go into what is provided. The difficulty now is that once we accept that we are falling in the proviso, and we say that it is in the course of carrying on my object, then I will get limited to 20%. No. So, I think in the facts of each case, one will have to take a call how to make an approach. I believe that this requires a substantial change further, at least instead of 20%, it has to be 20% or 25 lakhs, whichever is more, at least that reduction is very much necessary. Because otherwise, the smaller entities would suffer more rather than the larger entity. So this is charity where some issues are likely to arise. In the context of the amendments which they have made for filing that Form 10 within the time limit now provided, and of course also provided that 11(2) benefit will be lost if it is not filed in time. I am not on the return for the time being. The Gautam did make a reference that the prescription of time limit itself being procedure in nature, the courts might take a view or may take a view that the government does not have authority to provide that time limit. Now, you know, if you trace the history, it's very interesting. I don't think I will have time to look at other provisions, but I think it's worth noting that Nagpur Hotel Association's judgment, which came from the Supreme Court, prior to that, the judgment was given by the Bombay High Court. And Bombay High Court had decided two issues. That under Rule 17, the government does not have an authority to prescribe the time limit, and then of course they say it's a procedural in nature, you can file it up to at any point of time. The Supreme Court did not deal with the first issue which the Bombay High Court has decided, and that issue remains open in all other cases. But now with the amendment, perhaps that issue may not survive because there is a specific provision being made in the law itself. So indirectly, the observations of the Bombay High Court in that case are also getting reversed by virtue of a specific provision now sought to be made in Section 11(2). So far as the medical expenses are concerned, of course, I was just jokingly discussing with Yogesh Star, there is a person who has to claim all these deductions for the expenses which are incurred. By the time he reaches to a conclusion that I am eligible, he will fall sick, you know. And he will incur further expenditure, you know. I still remember that, you know, all these small things which they made. I think it is more than 2.5 decades or 2 decades back, I think 2.5 decades back, at the Babylon Stadium, when Mr. Balkiwala was dealing with, I think, 80 EU, if my memory is correct at that time, the deduction being granted to a blind or handicapped person. And it was attached with so many conditions, you know, that I don't know whether blind man can ever read that, you know, or can somebody make read. So he was so agitated. I don't mind saying what he is saying. I am not saying this, since I think they are recording him. He said that we must find out the bureaucrat who has thought of these conditions for putting in this section, and it is better that we request him to remain at home and pay him salary at home. That would serve nation better. And he also further stated that instead of insulting people by making such provision, it is better not to give. We have, that 100 rupees and 200 rupees, hostel allowance and I don't know, education allowance. Are these worth in this today's life? Better not to have it. I think people should reject. I don't want to claim this. I think there's a boycott of the deduction which is provided. That's what is needed in such cases. Only one or two points. Since the Gautam specifically mentioned about the MAT and foreign company DTA benefit, etc. We have a debate going on for a long on this MAT and a foreign company. Remains unsettled. The only way perhaps it can be settled is, issue will always remain open, that the government should make a specific provision that MAT provisions would apply to a foreign company in a case where he has a permanent establishment and only in respect of income which is assessed under Article 5 and 7. If this provision is made, I think almost all issues which we have been facing with regard to MAT of a foreign company can be taken care of. Because then all royalty, tax, lower rate, all those things will get covered there. Subject to, of course, this 5% now, 194 and whatnot. There those issues should remain. But largely, I think it should get covered. The last one on this 195.6, which is sought to be amended to provide for giving an information in respect of every payment made to a non-resident by a person responsible for making a payment. The Yogesh was just telling me that when I send the tuition fees to my son, I will have to now report. But the largest problem would be with those. I don't know what type of ultimately we will provide, but the provision is so sweeping that any person who is responsible for making payment to a non-resident. Now everybody travels nowadays even for personal purposes. You make large number of payments there also. Are you going to? Are you expected to report all those things in this foreign travel? And I don't think that the details of the expenses, though legitimately you have incurred, you must be giving, because you are not claiming a reduction. And those who are traveling to a particular few countries or few cities very often, maybe for a personal purposes, they will have more difficulty in giving the details. I don't think I should say any further. So I don't know how do we make laws, in this country. Lastly, on section 288, the point to be noted is that amendment in 288 takes effect from 1st June 2015. We have to be very cautious on this. And therefore, your eligibility to make a tax audit or not will be decided on this basis for this year itself, almost in all cases, unless you are clever enough to complete that by 31st May 2015. I don't know whether you will be able to do it, because by that time the electronic filing system may not have come. But the only saving grace is that the provisions which are sought to be made are not for the purpose of making a representation. So they are not applicable to representing an SSE in the income tax proceedings. There, none of these provisions would apply. So to that extent, I think there is saving grace. I think this is what perhaps I thought I would just mention within the time which is given to me. And I think we have one or two questions. If we have the chairman of the committee says that one or two questions we will take. Chairman seems to have been relieved from that also.
Friends, this is it for a while. The well-deserved vote of thanks will be given by our convener, Mr. Dinesh Kumar. I request Dinesh to please give a very well-deserved vote of thanks.
Good evening, It's my privilege to propose vote of thanks to all of these three stalwarts for today's meeting. We are thankful to you all, sir, for sparing your valuable time with us. We are grateful to Shri Kishore Karyaji for chairing the session and adding the further touch to the amendments made by this Finance Bill 2015. I would like to thank Yogesh Thaji for his masterly analysis of amendments made by this Finance Bill relating to international tax and business trust. Sir, we will live with our questions as long as we get the benefit of your wisdom. I would like to propose our sincere thanks to Sri Gautam Nayak for his excellent coverage of the amendment section by section made by the Finance Bill relating to direct taxes. I, on behalf of Chamber of Tax Consultant and WRC, propose a very hearty vote of thanks and request you all to carry on.